Welcome to the World Wire Update. Don't forget to subscribe and click the bell icon for more updates and thrilling short scenes. The world runs on water, not just for drinking, but for moving everything we use daily. Oceans and rivers are the highways of our global economy, connecting continents and cultures in ways we rarely notice. The phone in your hand, the clothes you wear, the coffee you drink, most likely, they all crossed an ocean. Every day, millions of products make their way across vast distances, linking factories, farms, and people from every corner of the globe. Global shipping is the invisible engine of our economy, with massive ships carrying trillions in goods. These floating giants are the backbone of international trade, quietly powering the shelves of our stores and the supply chains of entire industries. At the heart of this system are a few critical shortcuts: man-made canals that save ships time and money. Without them, journeys would be longer, riskier, and far more expensive, reshaping the very nature of global commerce. The Panama Canal connects the Atlantic and Pacific, avoiding the long, dangerous route around South America. This engineering marvel has transformed shipping, making global trade faster and more reliable. The Suez Canal links Europe and Asia, bypassing Africa. It's a vital artery, allowing goods to flow between continents in record time, and its importance cannot be overstated. These waterways are strategic assets, dictating the flow of commerce and power. Whoever controls them holds a key to the world's economy, influencing everything from fuel prices to the cost of your morning coffee. When these arteries face problems, the world feels it, like the current drought crippling the Panama Canal, causing delays and soaring costs. Even a single disruption can ripple across continents, affecting businesses and consumers everywhere. This fragility has sparked a global search for new routes. Nations and companies are racing to find alternatives, hoping to secure their share of the world's trade and avoid costly bottlenecks. It's not just about efficiency, it's about power, influence, and securing economic futures. The stakes are high and the competition is fierce, as countries vie for control over these vital passageways. A new canal in the right place could redraw shipping maps and shift the balance of power. The world is watching closely, knowing that the next big shortcut could change the rules of global trade. Enter one of the most ambitious proposals yet, a new canal through Thailand, backed by China. If built, it could rival the Panama and Suez, offering a new gateway between oceans and reshaping trade in Asia and beyond. This project could change everything, opening up new possibilities and challenges for the future of global trade. The dream of a canal through Thailand's Kra Isthmus is centuries old. The idea: connect the Andaman Sea to the Gulf of Thailand, letting ships bypass the congested Strait of Malacca. The Kra Canal would be a 135-kilometer channel, deep and wide enough for the world's largest ships. It could save ships up to 3 days of sailing, translating into huge cost savings. Proponents see it as a new hub for trade, industry, and jobs in Thailand. But the vision goes beyond economics. The Strait of Malacca is a strategic chokepoint, vulnerable in times of conflict. A canal under friendly control would offer a vital alternative route. That's why the project has caught China's attention, and why it's back in the global spotlight. China's interest in the Kra Canal centers on the Malacca dilemma. 80% of China's oil imports pass through the narrow US-influenced Strait of Malacca, a major vulnerability. In a crisis, the strait could be blocked, choking China's economy. The Kra Canal offers a shorter, more secure route, fitting perfectly into China's Belt and Road Initiative. For China, building the canal isn't just about trade, it's about national security and projecting power. It would give China's navy faster access to the Indian Ocean and reshape regional dynamics. The $50 billion price tag is an investment in China's future as a global superpower. The Kra Canal is often compared to the Panama Canal, but the challenges and opportunities are quite different. While both projects aim to reshape global shipping, their geographic, environmental, and economic contexts set them apart in significant ways. Panama has long been a cornerstone of global trade, connecting the Atlantic and Pacific Oceans. But in recent years, severe droughts have exposed its vulnerability. Its lock system depends entirely on fresh water from nearby lakes. When water levels drop, the canal's capacity shrinks, causing costly delays and bottlenecks for shipping companies worldwide. In contrast, the Kra Canal would likely be a sea-level canal, eliminating the need for locks and reducing the risk of water shortages. This design could allow for smoother, uninterrupted passage of ships, regardless of seasonal rainfall or drought conditions. Strategically, the Canal would serve Asia's busiest shipping routes, directly competing with the heavily trafficked Strait of Malacca. Unlike Panama, its main competition isn't another canal, but a natural choke point that handles a massive share of global trade. For shipping companies, the Canal could offer a shortcut that saves up to 3 days of travel time and significant fuel costs. This efficiency could translate into lower shipping expenses and faster delivery of goods, making it an attractive alternative for many operators. However, the canal's success would hinge on its transit fees. If the tolls are set too high, many ships may simply stick with the free Malacca route, despite the longer journey. Striking the right balance will be crucial for attracting steady traffic. The real competition is for the 80,000 ships that pass through the Malacca Strait each year. A staggering volume that represents a huge potential market for the Canal if it can lure even a fraction of that traffic. If successful, the Canal could shift global trade patterns, rerouting ships and altering the flow of goods across Asia. But this will only happen if it offers a truly compelling value proposition, one that outweighs the risks and costs of change. Its impact would be felt most in Asia, especially in major port cities like Singapore and Shanghai, rather than in the Americas. The canal could redefine regional shipping dynamics and reshape the economic landscape. The stakes are enormous. Billions of dollars in trade and the future of regional shipping are on the line. Every decision, from engineering to pricing, will have far-reaching consequences. If the Canal can strike the right balance between cost and efficiency, it could become a true game-changer for global logistics, setting new standards for speed and reliability. But it's a high-risk, high-reward proposition, one that could transform shipping in Asia, or become a cautionary tale of ambition and complexity. The Canal faces enormous obstacles. The cost, up to $50 billion, is staggering, and many doubt it could ever pay for itself. Environmental damage would be massive, destroying habitats and disrupting marine life. Politically, the project is deeply controversial in Thailand, with fears it could divide the country and fuel separatism. Successive Thai governments have hesitated, wary of the risks. Instead, Thailand is prioritizing a land bridge, deep-sea ports on both coasts linked by road and rail. This $28 billion plan offers similar time savings, less environmental harm, and avoids splitting the country. For now, the land bridge is the preferred option. The canal remains a distant dream, stalled by cost, controversy, and environmental concerns, but the idea refuses to die. A China-backed canal would send shockwaves through Southeast Asia, fundamentally altering the region's strategic landscape. This ambitious project, if realized, would carve a new maritime shortcut through southern Thailand, bypassing the congested Straits of Malacca, a route that currently serves as the lifeblood of Asian trade. Singapore and Malaysia, whose ports thrive on Malacca traffic, could lose billions if ships divert to the new canal. Their economies are deeply intertwined with the steady flow of global commerce, and any disruption could have ripple effects on jobs, investments, and regional prosperity. Both countries quietly oppose the project, seeing it as a threat to their economies and regional influence. Behind closed doors, leaders are strategizing to protect their interests, aware that the canal could shift the balance of power in Southeast Asia. The canal would reorder the region's economic geography, creating new winners and losers. New trade hubs could emerge in Thailand while established ports might see their dominance wane, forcing countries to adapt to a rapidly changing landscape. The US, India, and Japan are also wary, fearing China's growing naval reach and influence. For these powers, the canal is not just about trade, but about military access and strategic leverage in a region already marked by competition. The US has backed Thailand's land bridge as a less threatening alternative, hoping to maintain the status quo and limit China's ability to project power into the Indian Ocean and beyond. India, especially, is alarmed by the prospect of Chinese warships near its eastern flank. The canal would bring China's navy closer to Indian waters, raising concerns about security and influence in the Bay of Bengal. The canal is more than a trade route. It's a flashpoint in the contest for power in Asia. It represents a new front in the ongoing struggle for dominance where economic interests and military ambitions collide. The decision to build it will shape the region's security for generations. Alliances may shift, and new rivalries could emerge as countries respond to the changing dynamics. The stakes are high, and every move is watched closely by governments, businesses, and military strategists across the globe. The Canal is a symbol of shifting power in the 21st century, embodying the hopes and fears of nations seeking to secure their place in a rapidly evolving world order. Its fate will echo far beyond Thailand's shores, influencing the future of global trade, security, and diplomacy for decades to come. Will the Canal ever be built? As of late 2025, it remains a dream. The cost, environmental risks, and lack of political will in Thailand are huge barriers. The government's focus is on the land bridge, not the canal. But China's strategic logic is strong, and the Malacca dilemma persists. If circumstances change, the project could be revived quickly. Disruptions at Panama and Suez show the value of new trade routes. If built, the canal would redraw shipping maps and signal a shift in global power. It would create new economic opportunities and new tensions. For now, ships still crowd the Strait of Malacca, but the dream of a shortcut endures. Whether it becomes reality remains one of the great unanswered questions of our time.